All right, let's dive in. South Korea's government just dropped its 2025 tax reform plan, and it is a massive one. We're talking about changes that are going to ripple through everything, from your own family budget all the way up to the country's biggest industries. So let's break down exactly what you need to know. So, the big question on everyone's mind is how is this actually going to affect my wallet? Well, this whole plan is really a story of two different approaches. On one hand, you've got some very specific targeted relief for families and for key growth industries. But on the other hand, there are some pretty big tax hikes for corporations and major investors. It's a classic balancing act, really. Okay, first things first. Let's talk about what's probably on your mind right away. The changes that are going to hit home literally. We're talking about things that affect families and the cost of living. And the government has made it super clear that they're trying to ease the financial burden of raising kids. And wow, this first one is a really big deal for parents. Right now, there's a non-taxable childcare allowance of a flat 200,000 won a month. But starting in 2025, that becomes 200,000 won per child. Think about it. If you have two young kids, your tax-free benefit just doubled. Just like that, every single month. That's a huge change. And it doesn't stop there. This support for families is, well, it's pretty broad. It covers everyday spending, with higher limits on credit card deductions for families with more kids. It's even getting into extracurriculars, making those arts and sports academies for young kids more affordable. The plan also recognizes modern life. Get this, now couples who live apart for work can both claim tax credits for rent. And for that huge expense of university, they're getting rid of the income requirement for tuition tax credits, which opens that benefit up to a lot more people. Okay, so moving on from our own household budgets, this reform is also a huge economic game plan. It's all about using the tax code to pour fuel on the fire for what the government sees as Korea's biggest growth engines for the future. And this next bit, it really shows you how they're thinking ahead. They're recognizing a massive cultural export and introducing a brand new tax credit just for creating webtoons. I mean, that's a massive shout out to Korea's incredible creative industry. So what this all comes down to is laser-focused investment in these high-potential areas. Along with that Webtoon credit, AI is getting a major upgrade to a national strategic technology, which basically opens the door to way bigger tax breaks for R&D and investment. The defense industry, which is booming, is getting similar support. And those tax credits that helped fuel the K-drama and film explosion, they're being extended all the way to 2028. All right, so we've talked about the big picture, the global stage. Let's zoom in a bit, right down to your local Main Street, because this reform package also has several things designed specifically to help the small and medium-sized businesses that are, the real backbone of local communities. So, to get people spending money locally, they're doubling the deduction limit for business expenses paid with things like Local Love gift certificates. For new entrepreneurs, they're raising the income ceilings for some key tax deductions. And for business owners who are really going through a tough time, it's now going to be easier to access their yellow umbrella funds, which is a kind of retirement safety net for them. Okay, so we've been talking about a lot of tax cuts in relief, right? But you knew this was coming. All of this has to be paid for. So now we've got to talk about the other side of the coin, the tax hikes. So what's the official reason for these hikes? Well, the Ministry of Economy and Finance put it this way, and I'm quoting here, to normalize the tax burden according to the ability to pay principal. Basically, the idea is that those who have more should contribute more. The biggest, most straightforward change here is that they're basically hitting undo on a recent corporate tax cut. I mean, look at this. It's simple. Every single tax bracket for corporations is going up by 1 percentage point. It's an across-the-board hike, and it's designed to bring in a lot more government revenue. And the other big hike? This one's aimed at investors. Right now, you're considered a major shareholder if you own over 5 billion won of stock in one company. Well, that threshold is being drastically lowered. It's dropping all the way down to just 1 billion won. What that really means is a whole lot more investors are going to find themselves paying capital gains tax on their stock sales. All right, we've gone through the cuts, the credits, the hikes, all the little details. So let's zoom back out. What's the big picture here? What does all of this really mean for you? So, when you boil it all down, this 2025 tax plan is really that classic balancing act we talked about. It's dangling these carrots, the tax relief for parents in key industries, to tackle some big demographic and growth challenges. And then it's using the stick, those higher taxes on corporations and major investors, to foot the bill. This whole plan really puts the government's priorities on full display. But it leaves us with a huge question. Is this actually the right balance for Korea's future? Will these policies work to boost birth rates and spark innovation, or will the tax hikes end up hurting investment? And that question, well, that's going to be the big debate as we all head into 2025.